What if the global economy you trust every day is not governed by fairness or competition, but by an intricate web of silent financial networks that quietly influence currencies, policies, and entire futures without ever appearing in public view? The uncomfortable truth is that what looks like chaos in world finance is often disciplined choreography, where unseen institutions move capital with precision, while ordinary citizens absorb the consequences without ever understanding the true source. For decades, people have been told that markets are free and natural, yet history reveals a consistent pattern of coordinated financial power shaping outcomes long before anyone is aware change is coming. Behind every recession, recovery, and sudden boom lies a system of influence that rewards those closest to the source of money creation, while pushing the risks downward to the masses. The modern world economy did not simply evolve. It was constructed step by step through strategic lending, political influence, and carefully maintained secrecy. To understand this reality, we must travel back to the era when money itself transformed from tangible gold into a promise controlled by banking institutions. When governments surrendered their right to create currency independently, they unknowingly transferred power into private hands that thrived on perpetual debt. This shift redefined money from a tool of exchange into a mechanism of long-term control. Once credit became the backbone of national development, the stage was set for financial dominance to grow quietly and endlessly. Slowly, dependency became normalized and sovereignty became negotiable. As industrialization expanded, major banking families funded railways, industries, and war efforts, embedding influence into every stage of national growth. With every loan issued, power shifted further from elected governance into financial boardrooms shielded by complexity. Economic stability became conditional on financial obedience. Countries that questioned the system found themselves isolated, sanctioned, or destabilized through controlled market pressure. Public attention remained on politics while real decisions were executed in private. This silent division of visible power and invisible control became the foundation of modern economic manipulation. Then came global institutions that promised support but delivered structural dependency. Under the guise of development, nations were reshaped to align with creditor interests. Policy reforms removed protections and opened markets to external dominance. Economic freedom became economic obedience, masked as opportunity. By the time globalization accelerated, the system had matured beyond easy reversal. Money moved faster than law could regulate. Profit became detached from real economic production. Speculation reigned where stability once stood. Invisible networks determined currency strength overnight, and nations learned the cost of disobedience through inflation and collapse. When the financial crisis hit, it revealed the fragility of a system built on illusion and leverage. Banks responsible were rescued, while citizens lost livelihoods. The lesson learned was never reform, but reinforcement. Control deepened through recovery strategies. Debt only expanded further. Quantitative easing injected capital not into communities, but into asset markets. Inequality widened like never before. And yet the narrative praised stability. Behind headlines praising recovery, dependency intensified. The underlying structure stayed untouched. Reforms were cosmetic and symbolic. Public confidence returned while transparency disappeared. The silence resumed stronger than before. Today, the same mechanisms operate more subtly through digital finance. Electronic money tracks behavior effortlessly. Surveillance and convenience merge. Currencies no longer only shape economies, they shape identities. Data becomes influence. Financial access becomes permission, and permission becomes power. Emerging nations struggle while elite networks grow immune. Economic policy reacts to markets, not to people. Democracy bends before capital influence. Governments follow the invisible hand rather than public voice. Every crisis shapes opportunity for consolidation. Every recovery reinforces hierarchy. Every reform disguises continuity. The system survives by adapting perception. Complexity becomes the shield of control, and language obscures reality. Global debt continues rising beyond comprehension. Interest enslaves future generations. Resources serve repayments. Public welfare sacrifices itself to financial obligation. The world economy becomes a machine fed by perpetual borrowing. No one questions the script, only the symptoms. The real power remains hidden by design. It thrives on misdirection. It feeds on acceptance. It flourishes in confusion. But history always leaves clues. Patterns reveal intention, and silence speaks louder than declaration. Those who question begin to see beyond the illusion. Awareness becomes the first disruption. Understanding breaks obedience, and truth weakens silent domination. The takeaway is clear. Global finance is guided, not random. Debt is leverage, not necessity. And control thrives where transparency is absent. The warning is simple. A system hidden cannot serve justice. The open question remains whether awareness will lead to reform or deeper silence. The future will belong to those who challenge the economic narrative rather than consume it blindly. Stay critical of easy explanations and polished headlines. Recognize patterns rather than words. And remember, the greatest power never announces itself. It simply operates while others sleep.